Hello and welcome to my channel, The Quality Investor. This week, some major news broke for a behemoth of the American economy. This health insurance giant and Dow Jones Industrial member tumbled on the very disconcerting news. The Antitrust Division of the hallowed Department of Justice launched an investigation into UnitedHealth Group, ticker UNH. Specifically, the DOJ is investigating the relationship between UnitedHealth Group's subsidiaries, Optum Health, and its insurance arm, United Healthcare. The news broke 20 minutes before market close on Tuesday, and you can see that swift drop right here. They swiftly lost 1.9% from $523.35, and then finally closing at $513.42. The decline continued steadily the rest of the week, reaching a low of $479.75 before closing on Friday at just $489.53. All told, a decline of 6.5% on this news. On today's video, I want to analyze this news from a strictly investment perspective about UnitedHealth. I want to address the specifics of the investigation and potentially answer some questions on how this will affect UnitedHealth as an investment going forward. Those of you that watch my videos know that I am a large holder of UnitedHealth and I'm very bullish about its future potential. So with that in mind, is this investigation an investment thesis altering event? Well, let's dive into the investigation. But first, if you enjoy content like this, please hit that like button and subscribe to the channel. Also, don't forget to share this video and hit that notification bell so you can know right away when I post more stock analysis content. All right, let's see what this Wall Street Journal article said about the investigation. The article is behind a paywall, so I will only provide limited quotes and paraphrase where I can. Essentially, the DOJ has been conducting interviews with healthcare industry representatives in the areas where UnitedHealth competes. These interviews included doctor groups. During their interviews, investigators have asked about issues including certain relationships between the company's UnitedHealthcare insurance unit and its Optum Health Services arm, which owns physician groups among other assets. Investigators have asked about the possible effects of the company's doctor group acquisitions on rivals and consumers, the people said. Specifically, they are asking if UnitedHealth's insurance arm favored Optum's physician groups in awarding attractive payment contracts. This may hurt rival physician groups. To understand what this means, we have to understand how the health insurer and provider relationship actually works. So this can be a bit convoluted, so bear with me. So you, the patient, you co-pay and cost share whatever your insurance plan is with your doctor, who collects your insurance info. The doctor sends the visit documentation and insurance info over to the medical biller, and the medical biller then submits to this clearinghouse. They're the pipes between payers, billers, and providers to route claims and any other info. That goes on to your health insurance, who then pays the doctor. Additionally, the health insurance company, they send an ERA back to the clearinghouse, and the clearinghouse sends any kind of issues back to the medical biller, who then sends on that information to the doctor. Now, the doctor, they have a contract for service with the health insurance, and they receive payment whenever they submit a claim to the health insurance. You are paying premiums to the health insurance, and then, of course, after all this doctor visit stuff is over, they send you an explanation of benefits telling you what happened. So I can see how it can be very confusing. Now, it's the contract between the doctor and the insurer that is the crux of the issue here. UnitedHealth Insurance and Optum, which own healthcare provider groups, among other things, are what is known as vertically integrated. It has become a dominant business model in the healthcare landscape. So in the context of this image, the health insurance is one arm of UnitedHealth. Optum is a doctor provider service, the other arm of UnitedHealth. So they're really under the same parent corporation, UnitedHealth Group. So what that model actually looks like is this. So you see here, we have UnitedHealth Group. They own Optum and United Healthcare. And then of course, Optum is Optum Health, Optum Rx, their pharmacy arm, and Optum Insight, their data analytics arm. Also, UnitedHealth acquired Change Healthcare a couple years ago, and then Optum Health here, these are the physician groups. These are the various doctor groups that Optum Health owns. And you can see here, other health insurance providers have the same type of model. Humana with their umbrella of corporations, Cigna and their umbrella of CVS, and they just acquired Aetna and their umbrella here as well. So the idea behind vertical integration, of course, is that it's a lot more efficient for the physicians and the health insurers to operate under the same parent. Supposedly, patients receive better care under this arrangement. This is an article from HealthcareDive that expands on the issue a little bit more. UnitedHealth under antitrust investigation by DOJ. Reports. As Optum has grown, so too have concerns that UnitedHealthcare might favor its physician sites, directing members to owned providers to keep more of the healthcare dollars in-house. UnitedHealthcare could give its own providers better rates, hurting other doctors in the area, or restrict rival insurers' access to Optum facilities, shrinking their networks. UnitedHealthcare covers 53 million people across a variety of insurance plans. UnitedHealth executives have said that UnitedHealthcare and Optum operate independently and do not exclude competitors from their respective businesses. However, experts have long pointed to the company's considerable scale and the market pressure it can exert on other companies. I think this illustrates the issue pretty well. So UnitedHealth, of course, they own the insurance and the provider groups. What they're saying here is that they can give better rates, the insurance can give better rates to their doctors, undercutting the market essentially, and then muscle out provider groups that are not part of Optum. So the implied allegation is that this creates an anti-competitive marketplace. However, the DOJ will have to prove harm to the consumer. I'm not a lawyer, so I don't know 100% what the burden of proof is. However, assuming this gets to court, I assume that the UnitedHealth executives, as long as they demonstrate that their insurance and their physician groups are completely independent, the DOJ will have no case. So what does this all mean from an investment angle? What are some potential outcomes of this? And what can we expect in the near term? Any outcomes that I do offer will be pure speculation on my part. But there are some things in the Wall Street Journal article that are illuminating. And I think it sets important context as to how to continue investing after doom and gloom news hits just like this. Just remember, when journalists write articles like this, they choose their words very carefully. And just as important, if not more important than what they do say, is what they do not say. So the article goes on. Investigators have also explored whether Optum's ownership of healthcare providers could present challenges to health insurers that are rivals to UnitedHealthcare. In addition, the Justice Department officials are investigating Medicare billing issues, including the company's practices around documenting patients' illnesses. Payments to Medicare plans go up if patients have more health conditions. So aggressive documentation practices by doctors and other healthcare providers can be lucrative for insurers such as UnitedHealthcare. The second part here is essentially fraud. So throughout the article, it uses phrases such as have asked, possible effects, could present challenges, and are investigating. These are vague and non-committal terms. They affirm absolutely nothing. They even allude to fraud, but never explicitly use that word. In fact, I could be incorrect about this, but based on my experience in the healthcare industry, the last part seems like a routine audit into Medicare billings. All insurers and health providers are subject to compliance audits. If somebody has some knowledge out there about these issues, though, please expand in the comments below. What is not said is so much more enlightening to me. Not a single allegation of harm is made to a market participant. Harm, specifically harm to market consumers, is one hurdle the DOJ must prove in an antitrust case. And this is not even a case because nothing has been filed in court, meaning there is no evidence of any wrongdoing at this point, at least nothing hard or material enough to even warrant a mention in this article. In fact, the article doesn't even mention a reason or probable cause for the DOJ to even begin an investigation. The most telling line to me is the probe comes as the Biden administration's antitrust enforcers have stepped up investigations of some of the biggest U.S. companies such as Apple, Amazon, Live Nation Entertainment, and Alphabet's Google. Okay, why? Aside from any hard or tangible evidence, an investigation like this takes years. For context, the DOJ filed an actual lawsuit against Google in October of 2020, and the case just went to trial in September of 2023. 3 years later, Google gained 77% in market share in that time, and there is still no resolution to this case. The worst case outcome, of course, is a breakup of UnitedHealth. They could be forced to sell off one of its subsidiaries. That seems very remote, however. Right now, the DOJ is fact-finding. Essentially, they are trying to gather enough evidence to actually bring a credible suit in federal court. Until then, and it may be years, it's business as usual. UnitedHealth will continue its growth and acquisition strategy. They will continue compounding their free cash flow and create real value for investors. Just taking a look quickly here at some of their more important summary metrics, you can see UnitedHealth is a growth machine. Their income, cash flow, equity, shares outstanding, all of it is trending in the right direction. And you can just see their amazing compound annual growth rates for each of these things like revenue, gross profit. They have done an outstanding job of growth in the last 10 years. To me, this is an action of an overly aggressive DOJ that's in search of a big win. Those wins have been elusive of late. They've had some high-profile losses in antitrust cases, like failing to prevent the Microsoft Activision Blizzard merger and even losing to UnitedHealth Group in 2022, the aforementioned Change Healthcare acquisition. This decline is an opportunity to buy more UnitedHealth Group. The stock dropped 3% after it reported earnings in mid-January, and the stock was dragged down another 4% in the wake of Humana's earnings release in late January. UnitedHealth then slowly climbed over the next month, nearly reaching $530 per share just before the DOJ news dropped. And when UnitedHealth Group did report their earnings in January, I even recorded my earnings analysis video. And in that video, I stated that my ceiling for UNH was at $540 at a 20% margin of safety. So to me, this news is a bit of a sale for UnitedHealth until the market realizes their overreaction. With that, thank you for watching today's video. And what do you think? Is this UnitedHealth news just smoke, or is there real fire behind the DOJ inquiry? Let me know your thoughts in the comments below. Also, please hit that like button. And if you found this info useful, consider subscribing to my channel and joining our community. Thank you and happy investing.